Good morning to all. I am Ronak Bhattacharya. Today, our topic of discussion is cost accounting. It is a great pleasure to be here today to discuss the fundamental topic in business and also in finance, that is cost accounting. In every organization, big or small, faces one critical challenges. The challenge is that controlling the cost, maximizing the profit, minimizing the cost. These type of problems. So without a proper cost accounting structure, business may overspend or underprice the product or make poor financial decisions leading to losses. And in long run, it is very difficult to compete for a company with a poor cost management system. So that's why before we dive deeper, let's first understand what is cost accounting. Why is it so important? And how is it differ from financial accounting? Because we all know कि accounts is a particular thing, and accounting basically the process of maintaining the accounts, and the accountancy is just a bunch of rules, it's just a subject, that is accountancy. So in our today's class we focused one branch of accounting, that is cost accounting. Another two branches are there, the financial accounting and the management accounting. Financial accounting basically deals with the finance, cost accounting deals with cost, and management accounting basically is a combination of finance and cost. So we focus on cost accounting. So cost accounting is a branch of accounting that deals with identifying the cost, recording the cost, analyzing the cost. Cost accounting controlling the expenses to improve the efficiency, and cost accounting providing the data for decision making, like setting the selling price and choosing the cost effective production methods. Because a few years back, at that time, selling price is dependent on cost, but today's scenario, the competition will rise. We all are compete in every moment of our life. That's why in today's scenario, the cost is dependent on the selling price. When a firm wants to launch a particular product in a market, at first the firm set a selling price by market survey. After setting the selling price, the firm charged a certain percentage of profit that the firm deserve. And after setting the profit, actually the cost is come out from that method, and every firm follows the target costing method. So that's why cost accounting providing the data for decision making, like setting the selling price, choosing the cost effective and the production method. So why cost accounting is important? Imagine two companies producing the same product. One manager its cost effectively while the other doesn't. So who will make the profit? Obviously, the one that cracks and controls its cost structure properly. Cost accounting is very crucial because cost accounting helps the business determine the cost of production per unit. Cost accounting controls the waste and reduce unnecessary expenses. Cost accounting set competitive pricing based on actual cost. Cost accounting make informed the decision on product profitability. Now let's dive into the key concept of cost accounting. The first thing, the objectives and the scope of cost accounting. So what are the objectives? The primary objective of cost accounting is to understand the cost, to control the cost, to analyze the cost so that the business can improve their profitability. The main objectives of cost accounting: cost control, cost reduction, profit planning and decision making. So what is cost control? The cost control means identifying the areas of unnecessary expenses and reduce the wastage. This is cost control. And the cost reduction means improve the efficiency by using the resources wisely. That is cost reduction. Profit planning: before entering into particular production, forecast the cost and profits to make a smart decision. Every time I say कि cost accounting is a pre-mortem accounting, because cost accounting, why cost accounting is pre-mortem? Before starting the production, before starting the activities of business operation, cost accounting plays their role, their task. And the last thing is decision making, because from the dawn to dusk of the production, cost accounting plays a vital role throughout the production. And when production will start, then cost accounting provide the accurate data to the management for pricing, for budgeting and the production decision also. That's why cost accounting is very, very important for every organization. So what are the scope of cost accounting? The cost accounting applies to the various industries, including manufacturing industries, service industries, retail industries, construction industries. In every industries, every production department, cost accountant is required. For manufacturing industry, the task material, the material costing, to compute the labor costing, method of remuneration, wages system, Overhead costing is a very critical task to allocate the overhead costs. In service industries, determine the cost of providing services. In retail industries, it helps in pricing and inventory control. In construction industries, tracks the project-based cost and expenses. The process costing, contract costing. In service industry, they maintain operating costing. Costing is everywhere. So it's a very important, very effective subjects to run a business. The business may be small or business may be too large. Irrespective of the size, irrespective of the place, irrespective of the nature of the business, cost accounting is required everywhere. Then the two important things. One is cost centers and cost units. So what is cost center? A cost center is a department or section within an organization where costs are allocated, costs are collected. Examples: the production cost center means the manufacturing department. Service cost center means the maintenance or the HR department. So what is cost unit? We all know. From our childhood, we all know what is cost unit. A cost unit is a unit of measurement for which the costs are ascertained. Examples: in a textile industry, cost per meter of fabric, cost per meter of clothes. In transportation companies, cost per kilometer traveled. In a hotel industry, cost per room per night. These are called cost units. So understanding the cost centers and cost unit helps business track and allocate the expenses effectively. Next, we come to the another important section, that is profit measurement through cost accounting, because it is our introductory class of cost accounting. So we just try to build up a little bit idea all over the costing as an introductory part. So the another thing is important after understanding the cost accounting, the importance of cost accounting, the scope of cost accounting, what is cost unit and cost centers. The thing is that the profit measurement through cost accounting. So the profit measurement is essential for business survival. No profit, no business. No finance, no business. No money, no business. We all know. So the cost accounting helps in determining the accurate profit by calculating the followings. How? How is profit is measured? The profit is measured basically in our business. We just look into two profit. One is gross profit and another one is net profit. One is gross profit and another one is net profit. Gross profit means the in just formula sales minus cost of goods sold. Sales minus cost of goods sold. And the net profit means gross profit minus operating expenses. This is the two step of calculating the profit of a particular business. At first, we just deduct the direct expenses from the revenue from operation. Revenue from operation means it's a good name of sales. It's a good name of sales. Revenue from operation. So we just deduct the direct expenses from the figure sales, and then we come to the gross profit. And after that, from the gross profit, we deduct the indirect expenses. The indirect expenses, then we come to know the net profit. So, the tools for profit measurement, what are the tools for profit measurement? The one tool is marginal costing. It's a very important and effective costing, that is marginal costing. And the another thing is ABC. The another thing is ABC. ABC stands for activity based costing. The allocates overhead cost based on activities. And the marginal costing, it's a management decision, it's a part of management accounting. The marginal costing basically helps in break-even analysis. Example, imagine a company selling a mobile phone. It needs to determine how much profit it makes per phone after accounting for material, labor, overheads cost. So the cost accounting provides a clear breakdown of all expenses, ensuring the accurate profit calculation. This is a task of every cost accountant. Okay, before starting the production, you have to submit a clear-cut cost structure of that product. If the product is profitable as per the budgeted cost structure, then it will take a decision to start the production of the product. So how? What are the elements of cost and cost classification? In every business incurs three main type of cost. One is material cost, second one is labor cost, and third one is overhead cost. So the first one is material cost. Second one is labor cost, and the third one is overhead cost. These three costs are the main cost of every product. Material cost means the raw material used in production, the cost of the particular raw material that used in the production. Labor cost means the wages paid to the workers, and the overhead means indirect costs like the electricity, rent, and office expenses. Basically, these two costs, the material cost and the labor cost, just treated as a direct cost, and the overhead cost basically the summation of all indirect cost. So at first we comes to know what is direct cost and what do you mean by indirect cost. The direct cost means those costs who are directly related with the production. The costs which are directly related with the production, that's basically is direct cost. And the cost is not directly related with the proportion, that is indirect cost. Just say an example. The direct cost and the indirect cost. Direct cost means raw material, wage, and the indirect cost, rent of factory, electricity of office, the salary of the office worker. These are the indirect cost. So what are the type of cost? Direct cost, indirect cost, fixed cost, variable cost, and there is another cost, that is a semi-variable cost. So the direct cost, just recapitulate in again. The cost directly related to the production, that is direct cost. The cost not directly with the production, that is indirect cost. And the fixed cost. The fixed cost means the cost that remain the same. Means the cost is not dependent with the level of production. If the level of production high or the level of production low, but the fixed cost remain unchanged. But the variable cost basically change with the proportion with the production. Suppose say, I just show you these three costs by using our numerical figures. Suppose is a product A. On the particular product A, there are three costs. One is fixed cost, level of output, level of output, 0 units, 10 units, 100 units. These 3 units in independent, mutually exclusive, and here fixed cost, variable cost, semi-variable cost. The cost amount per unit, variable cost amount per unit, and semi-variable cost amount per unit. Okay. So the three, for 0 units of production, suppose fixed cost 5,000. So when production will increase, the fixed cost remain unchanged. That's why for 10 units it's 5,000 and for 100 units it's 5,000. Suppose variable cost for 0 unit, it's 0 because the cost proportionately changes with the level of production. When level of production 0, then variable cost 0. When level of production 10, suppose the variable cost 1,000. That means the per unit variable cost rupees 100. If per unit variable cost rupees 100, then for producing 10 units it becomes 1,000. And next for producing 100 units it became 10,000. But the per unit variable cost will remain same. It is an example of proportionate change. If a particular cost change proportionately with the level of production, then per unit will remain unchanged. Per unit will remain unchanged. At this level, variable cost will be also 100 per unit, but you produce only 0 unit. That means no production. So that's why the total variable cost will 0. Then come to the third part, that is semi-variable cost. Semi-variable cost means it is a combination of variable cost and fixed cost. It also be changed. The semi-variable cost also be changed due to the level of production, but the change is not in a proportionate way. That's why the per unit variable cost will not be the same when level of production will increase or decrease. This is the difference between variable cost and semi-variable cost. This is the difference between these two. Example, suppose for 0 unit semi-variable cost rupees 50. Why 50? Because the semi-variable cost is a combination of fixed and variable. So when we are in level 0, at that time the variable portion 0, but due to the fixed portion, that is 50. For 10 unit, suppose say it becomes just say rupees 10 per unit. So suppose it's a two part, one is fixed part and another one is variable part. If the fixed part is rupees 50 and the variable part at the rate 10, at 10 means per unit 10. So that's why in this level for the variable portion will be 100 and for 50 that will be 150. How I calculate? This 150 is two part, again the fixed part will remain same 50 and the variable part rupees 10 per unit, and this level of production I produce 10 units. So that's why 10 units into rupees 10, that comes 100, and if we add these two 100 and the 50, then 150. Is it okay? Okay. So for the level of 100 units, the variable portion 100 into 10, 1000, and the 50 will remain same, so 1050. And the per unit, here per unit calculation is not possible as because the level of production is 0. In 10 unit 500 and 100 unit 50. You see, when level of production will increase, the per unit fixed cost will decrease, but the fixed cost in total will remain same. When in variable cost, the level of production will increase, the per unit variable cost will remain same, but the total in variable cost will increase. And for semi-variable cost, let's try to calculate. Here 15 and here 105. It also increases due to the variable portion, but the increase is not in a proportionate way. Is it clear? Next. So, separating the components of variable cost. Some costs have both fixed and variable components as the semi-variable cost. The example of semi-variable cost, telephone bill. The example of variable cost, raw material, direct labor. And the example of fixed cost, floor rent, salary of office staffs. These are the Example of fixed cost. Then another important thing is installation of a good costing system. Installation of a good costing system. For effective cost control, business must implement a structured cost system. What are the steps? At first, you have to determine the cost objectives, select a costing methods, identifying the cost center and the cost units, and integrate the system with the financial accounting. A well implemented costing system improves the cost efficiency, pricing decisions, and the profitability. Then we come to the last part of our today's session, that is the relation between cost accounting and financial accounting. Cost accounting basically internal decision making system, financial accounting external reporting system. Cost accounting focused the cost, efficiency and the prices, but the financial accounting focused on the profit, loss and the financial positions of the company. The users of cost accounting basically the management authority, and the users of financial accounting basically the shareholders, the regulators, the tax authorities, that's the third party, the external parties of the business. How they work together. How they work together with a particular business entity. The financial accounting provides the overall company's performance, while cost accounting provides a detailed cost control and the profitability analysis. Example, a company may report an annual profit of 10 lakhs in financial accounting, but in cost accounting will tell which products are profitable and which are not. These are the combination of two accounting. Both are essential for our entity's success. So as per today's discussion, we may conclude to summarize the cost accounting as a help in business, understand the cost and improve the efficiency, cost control, cost reduction, cost expenses and reduce the wastage. Every business, whether small or large, must apply the cost accounting principles to stay competitive in today's dynamic market, because we all are in a competitive market. Every products have close substitutes. So that's why I hope the discussions has given you a clear understanding of the basic cost accounting. Thank you.